Welcome back, everybody, to another video with yours truly, Nathan Williams, the developer of AIRO. I hope by now you're enjoying the software, and I hope that you gain some value from this video, as I will be teaching strategy number 3 when utilizing the AIRO product. Today's strategy is the Great Britain Pound Asia Breakout strategy. All right, it's only utilized on the 6 Great Britain Pound pairs. All right, and it's going to be phenomenal. Let's go over it. So first, we'll talk about session times so you guys can understand how the different sessions play when you actually have this breakout strategy. All right. Next, we'll also I'll give you guys some knowledge around the best pairs to trade during each session that might help you concentrate on certain pairs depending on what time of day you're trading. I'm going to go over AIRO secret number 1. So in these videos, I'm going to start dropping a few secrets here and there on how to use AIRO more effectively. All right. And then we'll go over the entries and the exits of how to utilize and trade the Great Britain Pound Asia breakout strategy utilizing AIRO. All right. So first, let's go over the sessions. You guys have probably heard by now 3 sessions. Well, there's really 4. We call the 3 sessions the Asia session, London session, New York session. But there's really 4, and Asia is really broken up into 2. And so the 2 sessions are the Sydney session, which you can see starts at 5 p.m. Eastern and ends at 2 a.m. Eastern. Then you have the Tokyo session. That session starts at 7 p.m. Eastern and ends at 4 a.m. Eastern. Next, you have the Daddy Goliath sessions, the London session. Over 60% of the volume happens during London session. All right, and this session starts at 3 a.m. Eastern and ends at 12 p.m. Eastern. All right. And then last but not least is the New York session, and that session starts at 8 a.m. Eastern and ends at 5 p.m. Eastern. So you have your 4 sessions here, but we'll go back to talking about 3 because that's what most people are used to hearing. All right. So as you can see here, this is the chart of the world with the 3 sessions that we talk about most frequently and the best pairs to trade during these sessions. So we'll start on the right side and work our way back. The Asia session, which you guys already know, is a combination of the Sydney and Tokyo sessions. Sydney, Australia, and then Tokyo, Japan. All right. So in Asia session, the best pairs to trade are any pairs that utilize or have JPY, AUD, or NZD in them. All right. So any forex pair with those 3 in them are the best pairs to trade during that session. JPY, Japanese yen. AUD is the Australian dollar. NZD is the New Zealand dollar. All right. Now we'll move to the middle of the chart here, and you can see here the London session. The 3 best pairs to trade are any pairs with those 3 in them. And that's the GBP or Great Britain Pound, EUR or the Euro, CHF or the Swiss franc. All right. And then you have last over here on the far left, the New York session. And the best pairs to trade are any forex pairs with these 3 in them: USD or US dollar, CAD or Canadian dollar, XAU, which is gold, XAU USD. All right. Now, why are these the best pairs to trade during these sessions? Well, because these pairs are most traded as far as the currency pairs in these parts of the world. And so the economic news in these areas of the world are what affect these pairs. And since these pairs are the main currency for these areas of the world, when their financial markets are open and they're trading their currency, that is the best time to trade those pairs. All right. So I hope that made sense to you guys, and I hope that you guys can utilize that going forward. Next, we'll talk about secret number 1, and we'll jump into charts here in a second to show you exactly what I mean. If the zones are equal, how do we identify the trend? We already know that if you have more resistance zones or the red zones, you're looking for sales. If you have more green zones or support zones, you're looking for buys. But if they're equal, how do you know what the trend is? Well, let's go take a look. Let's jump out of here and jump into the chart. All right. Let me find a pair here real quick, guys, for you. All right. Let's see here. Zoom out here. All right. So we can see here, this is the Great Britain pound Canadian dollar. You can see there are 1, 2, 3, 4, 1, 2, 3. Now, because Asia session is not fully done yet, today we're going to look at yesterday. All right. We'll look at yesterday's Asia session breakout to show you guys how this works. And you can see clearly here, 1, 2, 3 zones didn't exist yesterday. All right. During this time. All right. So these didn't exist yesterday. Therefore, we only had these 2 green and these 2 red. So we had an even number of zones. So how do you know what the trend is if there's even amount of zones? Well, first thing you do is you want to measure the distance between the 2 inner zones. All right, there is 292 pips difference between these 2 zones, which means that as long as you have more than 50 pips in between the 2 inner zones, you can actually take trades in both directions utilizing the bag entry method. So again, I repeat, if you have an even number of zones, you can, and the inner zones have more than 50 pips distance between them two, you can take trades in both directions. All right, that's a tip for you guys. That's a secret. All right, keep that in mind when you're trading. All right, now you won't miss those trades. All right, so we zoom in and we'll go look at now that we know we can trade in both directions, we'll look at the setup. So the setup is Asia session. So Asia session starts at the break of the day, so then the start of the new day, which is by this dotted white line here. If you don't have these on your chart, you want to right click on the chart itself, go to properties. You want to come over here to common, and you want to select show period separators. Again, right click, go to properties, come down, hit common, select show period separators, hit OK. These zones or these lines will pop up. All right. This is the start of the new day. All right. And so from the start of the new day to the start of the money zone, as you guys know, this tinted area here is the money zone. That is the Asia channel. All right. So now that we have identified what the Asia channel is, we need to now do what? We need now to mark it up. So we need to mark our charts up. All right. So we mark at the top of the channel. So the highest point at the body, don't worry about the wicks, at the body, and then we mark at the lowest point. And you can see that anytime between here and here, this was the lowest point. From here to here, start of the money zone, this is the highest point right here. All right. The next rule is we want to make sure that there is less than 50 pips between the zone, the Asia channel. We want to make sure the Asia channel is less than 50 pips wide. This Asia channel is only 38.5 pips wide. Therefore, the trade is valid. Now, we'll talk about why you want to make sure it's less than 50 later. All right. So this is less than 50. So here's the rule. The rule is, 1, we know that because there are even amount of zones, we can trade in both directions. All right. We already have seen that prices bounced off of the bottom and it's already had a bag entry. So we know we're most likely looking for a breakout to the upside. We're most likely looking for a buy, most likely. But let's see what happens. All right. You can see here, price never broke below the Asia channel to the downside. But the first time it broke above, and again, we went the first candle inside the money zone to close above. This candle was the first candle that closed above the Asia channel inside the money zone. Therefore, we take this trade. You can see it went backwards 3 pips, and then it ran up 78 pips. Went backwards for 3 pips, ran up 78 pips. All right. Let's look at another trade. All right. I already got that one marked up. We'll clear it out. We zoom out. We see here these 2 didn't exist yesterday because, again, we're looking at this time frame. These happened today. This is yesterday. You can see here 1 green, 2 green, 1 red. So we already know our trend is up. So we already know we're looking for a buy. We zoom in. All right, we zoom in. We now want to mark the Asia channel. All right, right about there at the body for the top, and then right here. This candle is right at the dotted line. That counts. So make sure if the candle is right on the dotted line, you mark that one if that's the lowest point. It's the lowest point here. So we have our channel. Next, we check to see the width of the channel. We can see here it is only 30 pips wide, so we're in a valid trade. And we look for whatever the first candle inside the money zone that closes above Asia channel. Boom, the very first candle of Asia session closed above the channel. All right, we got in, it went up 11 pips, it dropped 24 pips, and then it ran up 92 pips. That's a winner. Here's why. The rule for take profit and stop loss is the exact same for the bag entry. So with the GBP Asia session breakout, you want a 20 pip take profit, you want a 40 pip stop loss. All right, this one went backwards 24 pips, it ran up 92 pips. This is a winner for us. All right, now let's go look at a couple losers, or I would say losers, but let's go look at a couple chariot trades that were invalid, so you would not have taken the trade on. All right, and here you go. Great Britain Pound AUD. Zoom out. You can see here 1, 2, 3 red zones, 1 green zone. So we know we're looking for sales. All right, we zoom back in. Mark the high of Asia session. Boom. Mark the low of Asia session. Boom. All right, that's the low. Just the candle right before the money zone. All right, and then and then this is the highest at the body. Remember, at the body. Don't worry about the wicks. All right, and then we want the first candle inside the money zone to break the Asia channel. First, we measure the distance. The distance is 72 pips. This is an invalid trade. Now, why? So it's invalid because remember, the ADR, the average daily range. That's how many pips a pair moves each day. If it is 50 pips or more, that means it has exhausted the majority of it, half or more of its ADR. The Great Britain Pound pairs move in the anywhere from 80 to 140 pips per day range, depending on which Great Britain Pound pair you're talking about. All right, and so at 50 pips or more, you've already exhausted about half or more, depending on the pair, of their average daily range, which means that you're most likely not going to have the momentum to carry you 20 pips in that direction. All right. So as you can see here, inside the money zone, this candle was the first to break, which means we got in on this candle here. And you can clearly see here, it drops 11 pips and then it runs back up 49 pips, almost 50 pips. All right. That's it. We lost that trade because we have a 20 pip take profit, 40 pip stop loss. So because the average daily range was exhausted and we saw that the actual Asia channel was more than 50 pips, we stay away from this trade. We stay away from this trade. All right. Now, that is how it works, guys. I thank you for watching the video. Hope this made a lot of sense. We'll continue to go over this strategy in future live calls. Thank you.